start with the usual performance update, which is a premiere at the same time. This is the first time we report the performance of our new Singularity Small and Mid. So how did our solutions and strategy perform last month?
So in general, last month, economic data continued to come in strong, but the market's reaction to it was a bit more muted, not least because of progress on the vaccine front, reopening of economies, and inflation scares related to that. And that is the big question on people's minds, whether this increase of inflation is more transitory or more permanent. But against this backdrop, the Singularity Fund was roughly flat against global equities that were marginally positive. Since inception, the strategy is up roughly 75% net of fees. And the new strategy that we launched in the small and mid-cap space that we call the Singularity Small and Mid launched on May 10th. And for the second half of May, since launch, the strategy was up by a bit more than 5%. So off to a good start. And we started the strategy with an AUM of 5 million from seed investors. In the backtest of the strategy, which is based on live data, which we've collected since 2017, as we've been scoring companies on a global basis since then, the strategy is up by nearly 100% over this roughly 3.5-year period.
Last month, we also rebalanced our Singularity Index, which happens twice a year. Before we move on to the changes in the index, can you please describe what the Singularity Index represents and what the underlying strategy is?
The Singularity Index captures applied exponential innovation across sectors and across regions. We score companies according to their exposure to our 12 Singularity sectors where we believe this innovation is happening. The Singularity Index is largely a subset of the global MSCI All Country World Index in terms of names. But what the Singularity Index embodies is the most innovative companies in this space. So for us, the Singularity Index is an extract of the most innovative companies from this global universe and can be seen as a global innovation benchmark.
What were the major changes in terms of composition, sectors, or country and regional allocations?
In the rebalancing, we replaced 71 names out of the 300 in the fund. Roughly 13% of the index weight are made up of entirely new names. The portfolio turnover for the rebalancing was nearly 50%, two-sided. The biggest sectors in the rebalance portfolio remain big data and artificial intelligence, which were both capped at their 20% limit. And the biggest gainer in terms of index weight is virtual reality, which increased by 5 percentage points. In terms of gig sectors and regional exposures, the portfolio is roughly split 50-50 between tech and ex-tech. Consumer discretionary and technology sectors increased by about 3 percentage points, and healthcare was reduced by roughly 2.5%. We now have roughly 20% of the portfolio in Asia Pacific, mostly in China, but also healthy chunks in South Korea and Taiwan. And the exposure to North America was reduced to just below 70%. In general, what's important to understand is that we don't try to make bold calls as to where the market will be in 5 or 10 years, but we rather let the portfolio gravitate towards where innovation wants to go and where we believe the focus areas are that we need to concentrate on to invest in this innovation that is happening today.
Any company names you want to point out that made it into the index or some that moved up to the top 20?
When we look at our top 20 holdings, we can see a new top position, which is Taiwan Semiconductor Manufacturing. TSMC is the leader in chip manufacturing, is the leading chip foundry in the world, with all of the largest chip designers as its customers, from Apple, Huawei, Broadcom, Qualcomm, Amazon, you name it, counting to its customer list. They really produce the most sophisticated and smallest chips that are used nowadays in devices in the 7 nanometer, 5 nanometer space. And they have just recently invested 20 billion to go even smaller into the 3 nanometer space to remain cutting edge in this market. Another company that moved up into the top 10 is ASML Holding, which is also a name in the semiconductor space. They basically produce the machines to make the most complicated and sophisticated chips. They produce a machine called EUV, which stands for Extreme Ultraviolet Lithography Machine. These are used to make chips in the 7 and 5 nanometer space and smaller, and they have a de facto monopoly on this market. So TSMC and Samsung and other chip producers heavily rely on ASML's machines to make them. So for example, the Apple M1 chip or the A14 Bionic chip, they are based on this 5 nanometer technology, which is made with ASML's machines. Other interesting and notable companies that moved into the Singularity Index are Coinbase, Roblox, or UiPath. I'm sure everyone has followed the IPO of Coinbase, which was heavily publicized. This is now the first publicly listed crypto exchange. Roblox is an interesting firm because it operates in a space that they have coined human co-experience. Roblox operates a rapidly growing platform where people can come together to collaborate, to game, to play, to experience together. And it's a platform where developers can build their own software, build their own tools to bring together the community in a virtual 3D world. It's a very interesting company that has unlimited potential, essentially, if they execute right. Another one that's worth mentioning is UiPath. They are involved in something called robotic process automation. Think of this as little software robots that automate repetitive tasks and workflows. So these software robots can complete keystrokes, operate across different software and platforms to download things, extract data, grab things, move them around, to make companies more efficient and more profitable at the end of the day. And they are growing rapidly and gaining new customers by the day. So that looks like a very interesting company as well that is now in the portfolio.
Can you please elaborate on the indices style factor exposure?
Our portfolio can be characterized as having strong earnings and sales growth, as well as surprising positively on both of those metrics, very strong profitability metrics and low levels of debt, as well as a smaller exposure to traditional value factors. And these characteristics can be seen in a traditional equity style analysis, but also in the portfolio's characteristics. Software robots. I love software robots.